Hi guys, and welcome back to FutureFunded. Today I'm just going to be going through a very simple step-by-step strategy that I've been perfecting over years. It's how I used Trendline liquidity matched with breaks of structure to define my entry and get the best possible entry I can. This is the exact strategy I've been using to get passed on FutureFunded, to get consistent payouts and so forth. So I can't wait to show you. Let's get into it.
Okay guys, so as we can see, if we start on pound dollar, this is through back testing, by the way, so it's FX replay. I've spoken to you guys about this before. I do highly recommend that you use it. It's one of the best platforms for back testing. But as we can see here on the 15-minute time frame, to get our directional buys, we can see that price did an impulsive move to the downside. We then created some form of consolidation before we had our next leg to the downside. So the overall 15-minute internal range is from this high to this low. So we know we're in a bearish 15-minute range. All right, and the market structure, currently speaking, is down. So now when price starts its retracement phase back up into this range, all we are really looking for is two things: liquidity to be taken and points of interest to get tapped so that we can so that institutions can mitigate their orders. Well, the first area that I see is right here. Okay, this is a 15-minute point of interest, and what I see just below is really interesting. We've got this wick here showing us some form of liquidity. All right, so we know that this is most likely going to be quite a nice, powerful area for price to react from. Now, if we go into the 5-minute time frame, we can see that price started its directional move to the upside. But first we need to follow price. So we need to see, right, what's price doing currently? Well, on the 5-minute, we've had a break of structure right here to the upside from this wick. We then created a higher low, which then broke structure again to the upside. All right. Now, once price broke up, it then started to create liquidity. And we know that because we've got this trend line building up right here. So this is our second indication that price is just building more and more liquidity. Retail traders are coming into the market more and more. Okay. And then what does price do? It taps into that 15-minute point. It takes out this liquidity. And then in doing so, we then get that break of structure to the downside, signaling to us that the potential uptrend or retracement phase might be coming to an end. Now, here's the key part. We need to see liquidity get taken and we need to see a break of structure. Both of those things happen. Once that then comes into play, we then need to wait for more liquidity to get built. So this is what I like to call inducement. All right, these are just areas where liquidity is getting built up before the institution decides to step back in. And once it does, it leaves behind this really nice 5-minute point of interest. Okay, so now that we've had liquidity, we've had a break of structure, we have had a sweep of that point of interest within the bearish 15-minute internal range. You can see by the volume of these candles that this is a large institutional move to the downside, which makes the POI, the origin as to where they entered the position in the first place, even more powerful when price eventually comes back to it, if it comes back to it. All right, now you can see that in this particular occasion, all retail traders that were buying here, they've now all been taken out of the market. They got manipulated by price going up. They then put a buy order in here, as you can see where my mouse is, to go up to the upside. And the institution has stepped in, manipulated to grab as many retail buyers as possible before they've entered their real move. And then away we go. All right, so now that we've got all that, all we need to do now is go on to the 1-minute time frame and simply just wait. Okay, we just need to wait to see if price is going to come back to that 5-minute point. Well, what's it done right here? It's just created even more liquidity, which makes this level even more powerful because now we're getting retail traders starting to come into the market right here. Price does one last sweep, takes out this liquidity, grabs it, taps into that 5-minute point, and then we get the entry on the bearish candle to the downside with our stop loss above the high and then targeting that low again. All right, because we really want to take out this low, because if we take out this low, this is a good indication that price is likely to move further and further down. But at this point, it's all really just about, okay, well, now that we're in this trade and so forth, how are we going to manage this? All right, where are we going to take partials if we are? Where are we going to move our stop loss to break even if we choose to? Well, The ways that I look at managing my trade is I just focus on two things: liquidity and points of interest. Well, we know that there's liquidity down here, so this can be our overall target because we know that price has got high probability that it wants to go to there because that's where the orders are sat. And we've also got a point of interest right here. Funny enough, price literally melts all the way into this area right here, starts to show signs of a potential reversal. You can see a 1 minute lower high, a lower low, and then a break of structure. But the reality is all it's doing, it's just reacting to the orders within this 1 minute point of interest. But just because it's at this point of interest doesn't necessarily mean that it's going to reverse from it. Remember, the market structure is down on the 15 minute. We've broken structure to the downside on the 5 minute. More often than not, I would say that when all of these elements start to combine with each other, it makes the sell position far more powerful. And as you can see here, retail traders tried to come into the market here to pump the price up. They were successful to a degree, but then the institution stepped back in, and then price did exactly what we were looking for it to do, which is take out the liquidity and all of the orders that were sat down here. So essentially what I did is I took off 70% of the trade within this point of interest, and I allowed the remaining to run, and then I moved stops to break even as soon as price tapped into this point, because we don't know, right? We don't know whether price is just going to react and then come straight back up. We have no idea realistically. All we know is that we don't know what's going to happen next. That's one of the crucial elements of trading. You can't come into trading thinking that you know what the outcome of each individual trade is going to be, because you will get lost within the vicious cycle of the markets, and 9 times out of 10 the markets will take your money because you'll just end up making mistakes. So you have to treat trading as if every tick that moves either in your direction or against you, you don't know what's going to happen next. Price could just pump to the downside in your favor. Price could essentially just pump straight back up or rally straight back up, and it might not even be at a point of interest. It might just be at some fair value gap that you wouldn't have foreseen. Either way, you don't know. All right, that's the key takeaway from this. So managing the position is just as crucial as taking the edge in the first place. The edge will only get you so far. The rest is about, okay, where is price more than likely? It's a game of probabilities. More than likely going to reverse on me, and where is price more than likely going to go to, in my opinion. And then you can start to manage your trade based upon that. All right, so I hope that helps, guys. It was a really nice, clean setup. This is literally the edge that I've been taking for years. I do not waver. I do not move away from my strategy. Yes, I refine all the time because market conditions do change, but the overall foundation of this strategy always remains the same. All right. Cheers, guys, and I'll see you on the next one.
So guys, now that you've finally seen the edge, you've seen the strategy play out for itself, go to FutureFunded, get your challenge, and start implementing what I've said. And as always, make sure to like, comment, and subscribe for more content. I'll be doing more and more content every single week. See you soon.